if you're living in Texas and you like Texas, you might feel like it's okay to own 100 acres in Texas. Maybe you think you feel safe in Texas and you have a gun, right? And you have some horses and you have a tractor or a truck or a Jeep. You don't need to smuggle the gun, the Jeep, and the horses across the border tomorrow. So you can own that property. And you feel like, well, Texas is not going to impair the value of my land. So I guess I'm okay there. I feel like the circumstances of the individual and common sense will dictate your property distributions. But the apex property is always Bitcoin. And in my opinion, which is pretty well known, is if you had $10 million in US dollars converted to Bitcoin, and if you wanted to buy anything, you're best not to sell the Bitcoin. You're best to borrow against the Bitcoin. If the volatility of Bitcoin is going to be plus or minus 80%, keep your loan to value at 10%, you're safe. And if you're reasonably certain the Bitcoin is going to appreciate at 20% a year, and if you can keep your expenses at 5% a year, and if the volatility is not going to cause a max drawdown of more than 80% a year or 50%, you figure out what the number is. Once you figure out those three calculations, you can get to the point where you decide, I'm just going to hold my assets. I'm going to let my asset appreciate. I'm going to fund my living expenses with debt. If I want to buy something, another asset that I think is an asset, I might still want to borrow against my Bitcoin to buy the other asset. If you actually sell your Bitcoin to buy an asset, that's a diversification. And you could diversify because you want to diversify. That's a personal decision. But if you've got an asset going up 130% a year, and you said to me, Mike, name something else that you think will go up 130% a year that I can diversify into. The answer is I don't have anything, right? Like if you said to me, okay, well, I got to split my money 50-50, half goes into Bitcoin. What's the other half? I don't know. I guess a portfolio of big tech stocks, maybe the NASDAQ, maybe a combination of Apple and Amazon and Facebook and Google. You buy some wickedly cool technology, or you just take if you want to be very conservative, it's like, I just buy a house that I expect to live in the rest of my life because I know I'm going to get value from that because there's value to me getting up in the morning and being in my space. So that's rational. But I don't expect $1 million house to be worth $1 billion in 20 years. But there are people that put $1 million in Bitcoin that will make $1 billion off of it by holding it. It's a very simple principle, right? Which is your house in Texas isn't universally appealing to everybody with money on earth. And I can't oscillate the house in Texas 1 million times a second on an iPhone, right? So the problem is the velocity of the asset is slower and the appeal of the asset is slower. And there's a maintenance charge. The house leaks. You got to paint it. There's things you got to do to it. There's a property tax on it. So if you're looking for, a measure of energy that's easiest to develop or property you can develop on top of, then you want the most universally desirable property that's hardest to impair, that's easiest to develop, that can be utilized at the highest frequency. When I have a hotel, the hotel had every room booked 365 days a year. I'm obviously squeezing more revenue out of the hotel. But let's do a thought experiment. What if I had 100 rooms in the hotel and every room is booked every night, 365 days a year, and you're charging by the hour? Now, how many hours of the year, how many room hours are actually unoccupied in the hotel, even though the hotel is theoretically booked every room night? Even if 100 people book every room night in the hotel for 365 days, they have to leave the room. They leave to go to work. They leave to go out, to a bar. They leave to commute. And point of fact, the hotel that's fully booked is empty 2/3 of the time. So if I really could book out the room hour by hour, my revenues would triple. So you see where you get. Now, what if I could actually book out the room hour by hour to anybody in any city on earth? What if I could actually move the hotel or teleport the hotel every hour? I could also increase the pricing. I could move the hotel to the place in the world that the Venice for the Venice Film Festival, or I can move it to wherever the Super Bowl is. So if I could move the hotel to the place where the room rates are the highest by the hour, my utilization would go up, my price per hour would go up. What if my costs were fixed? Profitability of a hotel running at 47% occupancy at standard rates in Dallas, Texas is 10%. The profitability of the hotel running at 100% occupancy at standard rates goes to 70%. The profit of the hotel running at 300% occupancy goes to 200%. The profitability of the hotel running at 300% occupancy at the highest marginal rate you can get for a room anywhere on earth at any point in time is going to 3,000% or 30,000%. And so what did I just do? I just dematerialized the property and I moved it with a frequency which was unimaginable. That's what Bitcoin is, right? That's what happens when you dematerialize property. You have the option to move it with a frequency which is unimaginable to the highest marginal use, right? And when people get their heads around that, you realize that, well, do you want to own a hotel in Texas? No. Do you want to own anything fixed in the real world? No. What do you want to own? Do you want to own the apex property in cyberspace that's universally desirable to everybody, and then you want to loan it out to them for the number of seconds that they want to use it and then snatch it back at no cost or 1 Satoshi. And that really is what's interesting about Bitcoin and everything around it, right? I mean, all of the possibility to develop those businesses and develop those applications. So we don't have them all now. I mean, DeFi, I just described DeFi, by the way, in a way. I described, DeFi on Lightning, on Bitcoin with an intelligent, exchange hunting for highest optimal use. But you don't have to develop all those businesses immediately to grasp the potential. All you got to do is figure out that the potential is there, the incentive is there. You can do one of two things. You can either build one of those businesses, which is hard. It's hard to build Binance. It's hard to build an exchange. It's hard to build PayPal. It's hard to build Fidelity. It's just hard. You got to deal with the regulatory issues, the technical issues, the security issues. The other thing you can do is you can just own the Bitcoin and wait. There's an intermediate. You can own the Bitcoin and you can loan it out, but that means you have to basically pick the counterparty you trust. Maybe I get 130% appreciation by just waiting in cold storage. Maybe I get 135 or 140% appreciation. I get an extra boost of 5% to 10% by loaning it out and trusting someone else. Or maybe I go and create my own Coinbase or create my own fill in the blank, create Abra, create Square, create the next great payment network or the next great bank. And maybe if you're really good and you work really hard, you'll create something worth billions and billions of dollars. But that's a different thing. That's industry. You have capital. You got to invest it. If I lived 200 years ago, if you go back ex post facto, if I had a priori knowledge, I would go back and buy Manhattan in 1900. All of it. Buy everything you can. Just buy the land, hold it, keep it in the family. Right? That would be a good idea. Buy apex property 100 years before everybody else has to move there and wait. That's what I would do then. Today, knowing what we know now, I would buy the apex property in cyberspace. And the apex property in cyberspace is Bitcoin.